Let's say that you had a $500 insurance deductible and you just raised it to $1,000. It can lower your annual premium by up to 25%. So if your current premium is $1,200, that means you would save $300 a year. I mean, I don't know about you, but saving $300 a year in my pocket instead of giving it to the insurance company is enough incentive for me. Hi, and welcome to Beyond the Paycheck. I'm Paula Christine. This week, I thought we'd talk about how to save some money on your insurances, like your auto and homeowners. I know I personally shop mine probably every 2 years just to make sure that I'm getting the best deal. So it's very important to make sure that you shop insurances because it can save you a ton of money. So this is likely not going to be the most exciting conversation. Not talking about insurance is never fun. But by the end of this episode, you may find some tips that can help save you some money on your insurances. So let's dive in for our top 5 things that you can look at. So tip number 1, shop around and compare prices. Just like you wouldn't buy the first car you test drive, don't settle for the first insurance quotes you get. Take time to shop and compare prices from different providers. You'll be really surprised at how much rates can vary from company to company, even offering the same coverages. So look at websites like Policy Genius or Zebra. They make it very easy to compare multiple quotes in just a few clicks. I always say and recommend that you work with an insurance broker because they can shop multiple companies for you all at once. So let's take an example. So imagine you're shopping for car insurance and one company may quote you $1,200 a year. Well, another one might offer you the same coverage for $900 a year. That's a $300 savings just for spending a little time comparing prices. So over the years, that can really add up. So tip number 2, bundle your policies. So if you're like most people, you probably have multiple insurance policies, car, home, maybe even life insurance. Many companies offer discounts if you bundle your insurance. You get to simplify your payments and save money at the same time. For instance, let's say you're paying $800 a year for homeowners and $600 for car insurance separately. By bundling them with the same provider, you might get a 10% discount, reducing your combined annual premium from $1,400 to $1,260. That's $140 back in your pocket. So tip number 3, raise your deductibles. Now, this one requires a bit of planning. If you can afford to pay a higher deductible in the event of a claim, raising your deductible can significantly lower your premium. Just make sure you have enough money in your savings to cover that deductible. Don't remember the exact numbers, but I used to have my auto policy was at $500 deductible, thinking, if I ever got in an accident, $500 doesn't seem like a high amount to have to pay. But I raised it to $1,000 and my premium went down significantly. I did that also with my homeowner's insurance. I raised those premiums up. Likely when you think about your homeowners, how often do you feel like you're going to be making a claim? And most people, if it's a small claim, they just go ahead and pay it out of their pocket so that they don't get dinged. Because if I think it's 3 times, if you make claims for 3 times, the insurance company will likely drop you. And then to find a new one, it becomes very difficult. So you really don't make a lot of claims unless it's for a significant, like say your roof blew off or something like that. But if you just had a small water leak or a burn on your carpet or something, you're not going to make an insurance claim for something that simple that you can just pay for out of your pocket. So let's go with an example of that really quick. So let's say that you had a $500 insurance deductible and you just raised it to $1,000. It can lower your annual premium by up to 25%. So if your current premium is $1,200, that means you would save $300 a year. I don't know about you, but saving $300 a year in my pocket instead of giving it to the insurance company is enough incentive for me to raise my deductible. And if you took that $300 and you put it away, just a few years, you would have enough to cover your deductible. So tip number 4, take advantage of discounts. So insurance companies often offer multiple discounts that you might qualify without even realizing it. This could include stuff for safe driving records, having a security system in your home, Oh, that reminds me, I just had a security system in my home, so I need to let my insurance company know so that I can get a reduction on my health insurance, my homeowner's insurance. But I'm just scrambled after the holiday weekend for July 4th. So ask your insurance company. For mine, I use my credit union, and I'm going to use my security system. I also use college education as another one. If you belong to, say, a professional association or an alumni group, your insurer might offer you a discount for just being part of that group. These discounts can add up and save you substantially over time. And for the last tip, but not the least, tip number 5, review and update your policies regularly. Life changes and so does your insurance needs. Maybe you've paid off your car and you want to get, instead of getting full coverage, you only want to get, limited liability. Or your kids have moved out. That's a big thing with your car. I mean, kids on your car insurance is huge. So by regularly reviewing and updating your policies, you can ensure you're not paying for coverage you no longer need. Plus, it's a good time to reassess and see if you can find better rates. So let's say that you're buying a new car or you're purchasing a new home. You might want to check before you make that purchase, because sometimes, the insurance can be higher or lower based on that new purchase. So you want to make sure that it fits into your budget. I know that newer cars tend to be a little higher to insure than an older car, but sometimes not. I mean, sometimes my insurance on the last car that I bought, the new car actually went down a little bit than it did for the old car that I had. So it's really important that you make sure that you check what those costs are going to be before you make those purchases, to make sure that it's going to fit into your budget. Now, one other thing I want to say about homeowners insurance too that I found is because people have been paying a lot more for their homes than what they were actually worth. So not actually worth, but there's a bidding war on homes, and still today there's still a bidding war. But let's say you paid $300,000 for your house and the insurance company wants to insure it for what you paid for it. But realistically, if you completely burned down the ground and you had to replace it, would it really cost $300 to insure or to rebuild it? Maybe not. So you want to make sure that you're buying the insurance that fits your home. So there you have it. 5 things to plan for to save money on your insurances. Now remember, a little bit of time and effort can lead to significant savings. And who doesn't love saving money? I know I do. So thank you for tuning in. I appreciate you. And I will talk to you next week.